Good morning, everyone. It's Alyssa Corum and Ed Carson here with your market update. On today's show, we're taking a look at Spirit Airlines as well as United Technologies and Canada Goose. But first, let's check in with the major indexes. Right now, we are down across the board. We had the S&P 500 and the NASDAQ down about 1/4%. The Dow is down about 0.5%. And the NASDAQ did try to enter positive territory just a little bit ago. So if the NASDAQ can close in the green today, what would that mean?
Well, if we had a really strong day, like a gain, like well over 1%, and in higher volume than the prior day, that would constitute a follow-through day, perhaps, and so that would mean confirming the new uptrend, which would sort of like give a green light to investors to buy if you could find stocks to buy. There's not necessarily a lot of great stocks in great position, but that's something you want to see because basically no market rallies survive without a confirmed rally. Not all confirmed rallies work. We just had the early November rally fail pretty quickly, but it's definitely something we want to be looking at. The Dow and S&P, they're on their second day, so they can't be confirming the rally for at least a couple of days.
And also impacting the market today, the China trade war threat, perhaps renewed fears there? Yeah,
I mean, he's making these threats just before he's meeting with President Xi, so there's some hope that maybe it's just bluster. But he also said, hey, the Apple iPhone could hit tariffs for the first time. So Apple is down, and it's a component in all the major averages. Apple's in danger of losing its market cap crown to Microsoft. That's just sort of an interesting little tidbit, but Microsoft is doing a lot better than Apple right now.
All right, well, let's check in with some individual names. First on our list is Spirit Airlines. The ticker is SAVE there. Those shares gapping up in massive volume today, up about 17% right now, as late Monday, the airline announced that its revenue per available seat will spike 11% in the fourth quarter. That's well above the prior forecast for a 6% gain for that key metric that's closely watched for all of these airlines.
Yeah, it was really good news for this low-fare, high-fee carrier. The stock had been doing reasonably well. Airlines have been picking up in recent weeks, possibly because of the lower oil prices, meaning lower jet fuel costs. But Spirit's blasting higher. It's basically at a 3-year high right now. Really strong move. It's a good sign for the other carriers. Some of them are moving as well. That's really a blowout forecast given what they had already said.
That's right. Now the stock trading at a 3-year high.
Yeah.
And we're also going to take a look at United Technologies weighing on the Dow today, down about 6% in heavy volume. It's been trying to consolidate it. It's now around the lows of that consolidation, but the move is on the announcement that it's splitting into 3 separate companies.
Yeah, what's interesting is that it actually rose overnight. It was up about 2% and then sort of turned negative just before the open. It's done really sharply. It's going to split into 3 companies. It just acquired Rockwell Collins, which really beefed up its aerospace. And there had been some activist pressure to do something. Now it's splitting up. It's going to split off its Otis elevators and its carrier air conditioner heating systems units and remain an aerospace unit. And it's one of the latest conglomerates to do so.
Right, DuPont.
DuPont, General Electric is going through bits and pieces and more and things like that. But it's sort of interesting. What's going to be happening here is that it was a buy the rumor, sell the news. There was a lot of speculation this would happen. Also, the breakup isn't supposed to happen until 2020, so it's not exactly clear, but those may be reasons why it's selling off today.
All right, and last but not least, let's take a look at Canada Goose. Those shares down about 4% on news that the company is selling an additional 10 million shares, so investors not really liking the look of that.
Yeah, I mean, it's down 4 or 5%. It's not a very good action. I mean, one of the things on this is that this stock had really blasted higher on November 14th on earnings, looking really good in that sense. But the fact is that it's been consolidating since there. But if you owned it, the risk is when you're in a stock market correction like we are, that at best you can tread water for a while, and that's nice. It's nice to but then there's always the risk that something bad happens, and the bad news is going to hit you harder than any good news. And they already had earnings, so there probably wasn't going to be that kind of news coming down the pike. And so it's just a situation where maybe you just don't want to be taking that risk. I mean, it's something you would have been watching, and it's still not. It's not like terrible. It's just that you don't want to be, this is why you just want to stay on the sidelines, watching and looking at, leading stocks and waiting for a follow-through day and waiting for stocks to break out of bullish bases.
That's right, waiting for those very best setups. Not, it's clearing a buy point and, got Got to look for the best ones out there. All right, everyone, be sure to head to investors.com for all the latest market news and analysis. And you can also check out our content across social media from Facebook to Instagram to YouTube and Twitter. Thanks for joining us, and we'll see you back here tomorrow. All right, thank you. Man, that conference room light went out like right